Hey, what's going on, guys? This is Terrence Ray, back at you with another stock market update, weekend edition. Uh, right now, I got a screen up or chart up of the SPX. Now, coming into next week, the expected move is only 58 bucks. So I get that from the option chain right here, 58.36. Now, the past couple weeks, because of news, because of the first month of Trump being president, and a lot of the executive orders and tariffs. We've been getting a lot of two-way action in here, and this week, as you can see on Friday, we ended with a little small doji, uh, taking out this high. Did it actually take out the all-time highs? All-time high was 66,114, 60, no, 6128. I'm sorry. And we got to 6127. So we right up here at the all-time highs. It is my opinion that we'll break that sometime this week, but we won't get it'll probably break, go up a little bit and then we'll drift. Being as that we only got 4 trading days this week because of President's Day on Monday. So we may not get a whole lot of action for the week. But I do think that we'll drift higher and then, early in the week and maybe go a little bit sideways. Now let's pull up the SPY ETF. You can see on here what it looks like. This is the ETF, and you can see I had some trend lines right here, broke up right here, and we sitting right at this level. Uh, so like I said, I was looking for it to come here. I do have a position on in the SPY currently. If we can, or do I? Do I still got that? Let's take a look. I have to look sometime. Yeah, I got an iron condor on it here with 2 rows. If you look at Friday's video, you'll see where I went over the rows and on the order chain right here, and it just shows the position as I'm holding it, moving. Initially, when I set it, the market may have been somewhere back in here. I don't remember, right? And as the market goes higher, I was just rolling up the untested side. On the option chain, you'll see when I say roll up, this is the put side. So it would be moving these options this way, just how the option chain is set up. So on the Tasty Trade platform, you'll see that calls, puts, and down here, this would be up, which looks kind of weird. That's how the traders have it or used to have it in the pit when they used to trade, you know, at on Wall Street or whatnot. And so that's the way it's set up on the option chain. Now I can come up here and click this and change it. I'm so used to looking at it the other way that this will look weird to me. Now this is actually up, it's up now. So here's the call side, put side. And so basically as the market was going up, I was rolling up these puts this way, right? Because my initial strikes was like back here somewhere. And then as the market was going up, I was picking up credits by rolling up this side, right? Like that. And now here's the call side. So it kind of looks like this is the way, like if you don't know options, like if you are new to it, I probably would leave it like this. But I'm used to the regular way. So it would probably take me some time to get used to that. But this is how it looks. It's flipped like this. All right, so then I wanted to go over that just so you know. All right, so I'm holding with that iron condor, just up like 22 bucks. Now this week would be a great week for it because more than likely, like I said, I'm expecting us to drift sideways and not get a whole lot of movement. And I just want time to go by, and you'll see more theta come out, more time come out, and my profit should go up long as we don't get any large moves. Let's go and look at the triple Qs. I wanted to talk about these because the pattern here, you can see the triangle that I have drawn, and you can see how we broke out of this triangle. So I'm expecting for the NASDAQ, which is the triple Qs. I would expect for this to outpace the SPY to the upside just because of the gap here and the velocity. So we don't have no doji here. So I'm expecting these tech companies to continue to shoot higher. So I would expect the Qs to go a little bit higher. So, this wouldn't be a bad. I actually was looking at this and thinking about scalping it on Thursday and Friday. Kind of just missed my, study long, study wrong. But I expect this one to continue to go higher. I do want to talk about the IWM. I don't talk about the IWM as much, which is your small caps. And you can see it's in like a trading range sideways. So it's not moving a whole lot at all. So you can see that the Qs are outpacing it. The only thing you could probably do in here, maybe an iron condor or something like that. Uh, you don't have now the IV rank is really low, so I don't know if even if that would be viable unless you went like a duration iron condor, which would be something like I'd be selling time more so than theta, like maybe 60 days or 89 days. Coming out selling some junk out here because you can pick up some juicy premium. Basically, I'm substituting time. They don't even have options right here. Let's see if I close this back out, go back in. They updated. For some reason, these options aren't showing, but it would be something like this, right? Just something just like that. Come out further in time. You get more premium if you go out in time because there's more risk in the time, right? You could do something like that. And basically, the time will substitute for you not having the high IV rank. Now, let's go and look at. I wanted to talk about the XLP because I like the XLP. I think it's trending in the right direction. You see how it's just we had a pullback, and then a gap up right here, and then it just continued to go higher. This is your consumer staples ETF, and the consumer staples has stuff in it like, let me see, like Costco. I had to pull it up on here. We got Costco. We got Procter and Gamble, Walmart, Coca-Cola, Pepsi, Philip Morris, Colgate, Palmolive, Altrua, the Altrua Group, or Altria, how we say, Mondelez, Target. And so most of those stocks that I named in there, this would almost count as like a V-shaped recovery, right? So when you get that V, I expect this to continue to drift higher, right? That don't mean it's gonna go in a straight line. We could get a little chop in here, but overall, this particular ETF would be one that with this structure is one that I would like. It got a 60-cent dividend that it pays, so I could either you know buy it and own it in a different account. I wouldn't do it in this account, or sell puts in it. Got a 42.8 IV rank. So I'd be looking to come out maybe in March. It only got like a $2 expected move. So you'd probably have to sell it close to the money. I don't like those option strikes. So more than likely, either buy it and own it outright, or I would do something like maybe come to some of the underlines that make up the consumer staples. And one of them that I really like is Target, right? So we know what's going on with Target and they um with them going back on their DEI initiatives, um, basically taking lead from the White House. You can see that the market is trended down, like from what? This is January 28th. I don't know what day they said that they were gonna roll back DEI, but I imagine it was somewhere right around that time. And you can see the market just drifting down. I believe that it's already priced in, right? Like I think that the worst is already priced in. You can see that it's oversold on my stochastic, and it got like a 34 RSI, so it could go a little lower. But this is one right here where you may be getting Target at a good price, right? You may be getting target at a because this gap, in my opinion, will get filled at some point. I just don't think that that whatever the strike that's going on with Target or excuse me, the boycott that's going on with Target, I don't think it'll last. I just don't. I think it's an emotional, whether right or wrong. I don't think people have the fortuitousness to to stick with it. I don't think they can stick with it long, right? Whether it's a worthy cause or not, I don't think people will stick with it long enough to make them really feel the pain. So it could drift a little lower, but you'll be getting target if you bought it to own it. Whatever you decide to do, you'll be getting it at a good price. I do believe this gap is too big of a gap. Just looking at market structure for it not to be filled. I'm gonna zoom this out. We go out 1 year in time. That's a big hole. Let's go. Let's do a 3 year chart. Look at that. Now, eventually you say, well, what about this one? It's possible this one could get filled right here. You got a price of let's say right around 111 to fill that, which is possible. Let's look at it on the weekly. So we're looking at it on the weekly. It looks like this. So you can see target. This is a 3 year weekly, was at 250 at one point. So I basically, to me, you guys know, to me, the chart rules everything, right? As a cash rule. Now the chart rules everything for me. I don't care what's going on in the news. I can see it right here. And so I like the company as a whole. I don't think uh too many people shop at it. All the women I know love it. They may not be buying right now, but eventually they'll let up and you'll be able to get this at a steal at some point. Now, as a trading vehicle, they got earnings on March 4th. I expect them earnings to be bad. I really do. And I think that that's what you see in the chart structure. It's already priced in. It's telling us that the earnings are going to be bad and the stock is already moving ahead of the earnings. So to get right up on the earnings and then try to trade it, I think the move is already priced in, is what I'm saying. Like you can see it in the chart that the earnings will probably be, if not bad, they may be neutral, bleak, and then they may announce something. Maybe they'll turn it around and say that they're going to support DEI, and the people come back, and then boom. So all in all, I don't think that it'll stay down. I would be looking to me. I would be trading this with some type of selling puts, right? You can come way out here to 110, which is that price level, and you can pick up a whole um but $1.17. You're out 16, you're outside of one standard deviation. That's what this dotted line is. Sell this 12 delta and pick up buck 17, right? If you want to be a little, and that's a 87% pop, and you got a 94% chance of keeping half of it. You can move closer. You want to get a little bit more aggressive and just sell the expected move. Come right here, sell the 20 strike, pick up $2. So I actually like it right there. I think that's worth the risk right there. You're out in March, 33 days, so you're a little bit outside of the earnings. You will have to sit through whatever happens in earnings. So be mindful of that. Or we could play it and wait till after earnings, then come in and trade maybe April. But I will be watching Target. Target to be something when they talk about buying low. This would be something that you would have an opportunity to buy in low. And, I was just thinking about something. One of the things that I would think that, you know, me, if it was, you know, you want to boycott a company instead of, or you want to stick it to a company, how about buying up the float? Like that's an idea that I don't think a lot of people, so the float is like your outstanding shares, right? The outstanding shares of Target, meaning that you get all of your supporters that are with you and you want to boycott Target. So we're going to take our extra money. We'll either raise it, create like take that money and create like a private fund, private equity fund or whatever, and then take the money that you raise and then buy shares in the stock, or tell all of your people that want to boycott it, everybody, whatever, how much you can afford, buy shares in the stock. You get enough shares in the stock, then you can make, you're a shareholder at that point. So if you got one particular firm that has enough shares in it, then maybe you can make some decisions, some board decisions. Maybe you can put somebody on the board that you want to change things. It's just now I don't know all the legal. I think it's like a certain percentage you have to get up to, and I'd have to research that. But that's just another idea that people could try. That Black people in particular could try. All people could try it, but I'm just saying um, if you're I don't shop at Target anyway. So, but if you're protesting Target and you want to or you want to boycott Target, instead of saying we're not going to spend money in the store, why not buy up the shares? Why not buy up all the outstanding float? Buy up the outstanding float, the shares, and then get enough shares to where you can put somebody on the board to make decisions, or you can start and you can influence the board to make decisions because you own so much of the company by way of being a shareholder. We never look at those type of strategies or even investigate those type of strategies, because the boycott, in my opinion, won't last. And they'll give you a trinket. They may come out and say something, then you take it off, and then it's right back to business as usual, right? Why not try to exercise some kind of control? But anyway, guys, that's just my idea. Just going over it. Maybe I'll start voicing my opinion just a little bit more, give you a little bit, and try to keep it based around stocks, right? So with that being said, guys, hopefully you got something out of this video. Hit the like button, hit the subscribe button, share. Let me know what you think about what I said. If you think that's a decent idea. If not, tell me why not. If you do, let me know why you do. We'll go from there. With that being said, I'm out. Peace.